No live video, and I read a very interesting report today I want to share with you. Kind of under the radar, everyone's talking about Bitcoin and things like that, but Goldman came out with a super bullish report on copper. And I want to show this report to you. Let me share my screen here for you. Because I want you to go from the beginning here. So this is from today, December 1st. Again, under the radar, no one talking about. They're saying that copper is going to $10,000 metric ton. So that's about 35 to 37% higher than the current price. A lot of times you're looking at copper where you look at per pound, and broke to $3. Now it's like $3.50. But just the report is thorough. It's actually very good. It's convincing. And going to 2021, copper market should face the tightest market condition in a decade. Period be framed by robo-cyclical policy-driven demand environment set against already low inventories, fast approaching peak of base case minus supply falling dollar. We believe significantly higher copper prices needed to help balance this structurally tight fundamental backdrop. Now, they go on to say a few more things here. The charts are great. Copper inventories, lowest level in 7 years. You're looking at solar demand. Use of copper is starting to really skyrocket compared to 2013. 19 looks really expect to go higher. Electric vehicles also surging. They have a lot of good charts, a lot of good. I don't want to bore you too much with it because I'm going to show you why this is so important if you're looking to buy gold stocks and why you should be going gold producers right now. Copper demand recovery sharply. Look at this line in September. And my favorite chart, the last one I'll show you here is right here. Record copper 10-year supply gap points to significant price support. I know this might look confusing, but when the blue line goes up, that's supply. Usually you're seeing this, or that the space between the supply. Prices of light blue usually go higher. So right, you see this spike, prices go higher. This spike, prices go higher. Now look, you have the blue line spiking, and look what copper prices are. So that's why Goldman believes it's going to go to 10,000, because look how prices outperformed here in 2009. They think it's going to go to here. They make a very good case. Why is this important? Because copper is a byproduct, or gold is a byproduct of copper. You get lead, you get zinc. It's almost like if you're drilling for oil, you're going to get natural gas. That's why they burn it for free some places, because they're looking for it, whatever it is. But when you look at the copper production on the balance sheets of some of these companies, and let's break that down. Let's go to Newmont first. So Newmont, if you're looking, just one is these companies are unbelievable. If you took their name out and you looked at their margins, they look like technology companies, right? People see gold, but they're trading at market valuations, 18, 19 times forward earnings, and they're growing probably about 12x the size of the overall market. So these things are already trading incredible discount. Now look, every 400, this is Newmont, right? Largest producer in the world, along with Barrick. $400 billion free cash flow per annum for every $100 increase in gold prices. Look at this, from 1,200, they go to 1,900. Look at these numbers, 13, 15, 17. I mean, it's kind of incredible when you look at Newmont. But when you look more into, let me get right here. So I just want to show you some of the results here. Produced 1.5 million ounces of gold, generated 1.6 billion operating cash flow. Guys, this is just for the quarter here, just for the quarter. 1.3 billion free cash flow. Total liquidity, 7.8 billion. Now, you're looking at these companies stronger than ever, right? But what's not being factored in is the copper production. And when you look at it here, so gold production, 6 million, 2021 is going to be 6.2, 6.7, 6.2, 6.7, all the way out. All-in sustaining costs are going to fall under 1,000, right? So gold prices are 1,900. People think 1,800, 1,900. People think they're going higher, rightly so, at central banks. These guys are profitable at 950. This is gold. Now, when you look at other metal production, this is 1 to 2 million ounces of gold being produced. And what they call that is gold equivalent analysis, where they take, lead, copper, zinc, and pile it in and create a gold equivalent. This way it's easier to understand. But it amounts to 20% production, right? It's important. Why? Because look where copper prices are. Nobody's really talking about this. I mean, look at this skyrocket. 340, right? This is a 5-year chart. Look where they are right now. I mean, that's considerable. And if you're looking at Barrick, who's another producer, again, their production is fantastic. So you're looking at, even back up here, look at this. High gold prices drive, they're not even mentioning copper here. High gold price drives strong cash flow. Operating cash flow, 1.9 billion. Record free cash flow, 1.3. These companies, these big producers are generating so much money they don't even know what to do with. And now you look at production, right? Gold operating results. This is their production, right? 3.5 million ounces. Average cost under 1,000. Again, great position. But look at copper production, 338 million pounds. This is just 9 months. It's going to be about 400. Their all-in cost right here are 217. I just showed you right now that copper prices are at 340. So, I mean, you're looking at a huge, huge increase. I mean, look where it was, 219. They're up $1, right, since March, but even more. Look at this massive move since June. You know, so what does that mean? Well, just, you know, you go to this page again for Barrick. I mean, you're looking at you know, say well over 400 million. For every dollar increase is an extra $400 million in free cash that these guys are going to generate. So I didn't want to spend so much time on this, but when you're looking at where copper is going, you're looking at the supply-demand imbalance, prices are going to continue to go higher, and these guys, these major producers, everyone's valuing them on gold or gold equivalent ounces. They're, even in their last results, these are the last quarter results, they haven't put this on the books yet in terms of the higher price. A lot of these companies are modeling for much lower. Focus on the gold producers and major ones. You got Newmont, you got Barrick, you got AngloGold, Kinross, another one, Newcrest, Equinox, and that's going to filter down to the juniors because they need to buy assets. They need to buy gold. And they're going to go after the ones with the best projects, and now they're going to pay top dollar for them, especially because the balance sheet is so great. So guys, every pullback on gold you should be buying, especially because copper's not even factored in, and most of us believe that gold prices are going to go a lot higher with all the central government printing. I'm Frank Curzio, as always. I'll report back to you guys soon. Take care.